All right, welcome back to another episode of the Black Bullion Show. Now, finally, we have a bit of a breather right now. We can all collect ourselves a bit while gold and silver take a bit of a breather. And of course, while our shiny friends were doing that earlier on this morning, guess who took advantage? And if you guessed the US 10-year Treasury note, you were correct. Now, in addition to this, the dollar is showing some brawn, but not like Arnold Schwarzenegger kind of brawn. It was more so showing high school football player level kind of brawn. And a lot of behind the scenes action was causing this. So let's first see if we can make some sense of what's going on and what happened earlier on in the day. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. So to start, let's take a look at the first major dip of the day around 4:30 to 5:30 a.m.-ish Eastern Standard Time. Now, gold went down, hovered a bit, then went down. Silver went down, kind of hovered a bit, went up, and then went down. So make sure you pay attention to that pattern there, because you're going to see some similarities with our friend the US 10-year Treasury note right here. Up, hover, or Market Watch tends to reload pretty frequently to show what the prices are in real time. So you're going to see that very shortly. But what the shape of the US 10-year Treasury yield mimicked was silver's shape. With its general, it was up, went down, hovered where it was, then went up again, and then retreated downward. Now, the yield is very different than the price of gold and silver. Now, if the price goes up, that means more people are coming into gold. If the price goes down, more people are leaving gold, most likely. Same thing with silver. Now, for the US 10-year Treasury yield, if it goes up, that means people are leaving it or disinterested in it. If it goes down, that means more people are piling in. So what this tells me by looking at it is, this morning, while gold and silver struggled a bit, people started piling in to the 10-year Treasury note. Now, for me, when I see something like this, I want to get down to the bottom of it. So let's see what was happening this morning. And what we find is that we had some trouble down in London town with Britannia. The pound was struggling against the euro and the dollar a bit because of EU and UK trade negotiations having stalled a bit. So let's take a look in more detail as to what happened. The pound sterling slipped deeper into the red against most major rivals Thursday after Brexit negotiators confirmed that no progress has been made in the pursuit of a UK-EU trade deal after both sides doubled down behind their respective red lines, risking further underperformance for the British currency. Investors were already eschewing sterling when the final round of accelerated Brexit talks came to an end. Although losses picked up after the negotiators, David Frost and Michael Barnier, set out their respective appraisals of the outcome in remarks that laid bare the substantial areas of disagreement that remain. Now, this comes from David Frost. At the high-level meeting, the Prime Minister set out once again the fundamental principles which we have repeatedly made clear would need to underpin any future agreement and which are intrinsic to the UK's future as an economically and politically independent country. Any agreement needs to honor these principles in full. The EU's proposals so far, while a welcome response to the Prime Minister's statement, do not do so. Again, it's David Frost, the UK's negotiator. So we've got a little bit of a gridlock happening on the other side of the Atlantic, and this gave some strength to the dollar earlier on in the day. And pretty much up until 9 a.m., we started to see a rise in the strength of the US dollar. Again, wasn't Arnold Schwarzenegger kind of strength. It was more so like high school football level kind of strength. And, we hit that peak around 9 a.m. and then we pretty much hit a reversal right after that. And one of the reasons as to why is because of this. So that dollar strength helped, or not one of the reasons why, but one of the things it contributed to was that dollar strength helped to contribute a bit to gold and silver's reversal this morning, even in the futures market. But remember, the dollar started retreating around 9 a.m. And it seems that that happened because of a reaction to this. And we had another million level set of jobless claims, but not just that, it was actually an unexpected uptick in jobless claims that we had last week. It was about 1.416 million Americans that filed new unemployment claims. So let's get some of this detail here. The level of new jobless claims unexpectedly rose last week, signaling a weakening trend in the labor market. As states across the U.S. grapple with a resurgence in the RONIs, another 1.416 million Americans filed for the first time unemployment insurance benefits, up from just over 1.3 million the prior week, to mark the first increase in new claims on a week-over-week basis since March. Now, guys, this report came out around 8:30 a.m. and pretty much right after that, around 9 a.m., remember that 9 a.m. time is very important, the market started to react to this, and the S&P 500 and Dow futures began to turn negative. And what we started to see around that time were people piling into the safe havens, such as the US 10-year Treasury. And right around that time as well, silver began struggling a bit around this 9 o'clock time. And that's also likely due to its connection to the not so good economic news, and its industrial colors basically began to show. Now, finally, the last bit of economic data that we got today were the leading indicators. And the U.S. leading indicators rise in June, pace of improvement slows. Data suggests U.S. economy will remain in recession territory in near term. Now, as we got the news at 10 a.m., the U.S. 10-year Treasury got a huge bid around that time because we actually got a massive dip in the yield around that time. Now, again, I'm going to see if this thing will actually load up around that. Okay, there we go. So right around this moment here, the US 10-year Treasury, as you can see, around 10 a.m., pretty much on the dot, people just start to pile into the US 10-year Treasury. So it got a huge bid around that time. Also, around 10, gold began a sharp ascent right around that time of 10 a.m. once we got that news. And while that was happening, silver, was struggling a bit, had a bit of a downtrend moment, but then started to pick up the pace a bit. So its industrial colors are showing a little bit today, but it also still has that safe haven quality that we know and love, that duality that silver has as well. But today, gold is looking pretty strong, and it's getting closer and closer and closer to that $1,900 level. So, everyone, that was your Thursday today. I hope you enjoy the rest of your day. We have 2 more episodes coming, one an hour from now, one 2 hours from now. So hit that subscribe button, hit the like button as well. And yeah, come along for the ride. Thanks again. It's Black Bullion.